Welcome back, everyone. What you're about to hear could change the way you think about money, power, and technology for good. The International Monetary Fund (IMF) has recognized a new framework for a worldwide digital currency system for the first time in modern history. One that could put Ripple XRP right in the middle of global liquidity without anybody noticing. That might sound brave, but remember that history has always favored those who built the tracks for revolutions. The Medici family came up with double entry bookkeeping, which led to a boom in trade across Europe. Because of this, the telegraph changed banking forever by cutting communication time from weeks to seconds. And now blockchain is doing for value what the internet did for information a long time ago. The question is, which digital asset will connect all the others? The recent findings from the IMF say that XRP might be the answer. The world's financial system is falling apart. SWIFT, the worldwide payment network that started in the 1970s, transports trillions of dollars every day. Still, it takes days to finish a deal. It's like sending an email that doesn't get there for 3 business days. That's not new. That's what inertia is. The world's money system is starting to break down. SWIFT, the worldwide payment network that started in the 1970s, transports trillions of dollars every day. Still, it takes days to finish a deal. It's like sending an email that takes 3 business days to get there. That's not new. That's just staying the same. The currency system is a new idea from the IMF that has been made public. They say it's a digital marketplace where all kinds of money, from CBDCs to tokenized deposits, can exchange easily through a neutral bridge asset. They call it money. We call it the digital oil of the new economic engine, or the missing link. And here's the catch. This is not a theory. The IMF's report expressly mentions a private settlement asset that has previously been made for this purpose. Ripple's XRP ledger is that model. Let's go back in time to see why this is important. The US dollar became the world's reserve currency when the Bretton Woods Agreement was formed in 1944. Not because it was perfect, but because people believed in it. Trust made empires. But in 2025, people stop trusting governments and start trusting code. The IMF is changing too. Their goal is to create a worldwide clearinghouse where transactions don't depend on banks trading with each other, but on ledgers that have been checked by a transparency code. That was the whole point of the XRP ledger when it was established in 2012, long before the word CBDC even existed. Ripples didn't make a fresh money. They put in the pipes for the Internet of Worth. So let's look at what the IMF really said and why it's causing problems in the world of finance. The IMF FinTech also wrote about trusted bridges and money flows. The people who wrote it, who are prominent economists and directors of monetary policy, talked about 3 possible ways to make digital money function together. The first is a private settlement asset and marketplace that mentions Ripple's XRP. The second is an open source model that uses Stellar Lumens as a reference. The third, a centralized multi-CBDC network, is still just a theory. Only XRP's model works in real-life institutional corridors right now. Let that sink in. The IMF isn't making up stories about XRP. They're looking at the plan for how it works. To understand the size, consider about how oil changed the way businesses worked. Factories used to run on coal before oil. Slow, nasty, and costly. The globe became industrialized overnight when oil came. Correspondent banking is how money moves around nowadays. Slow, unclear, and expensive. When XRP's bridge system grows, wealth will move like energy, quickly and without friction. And history backs up its growth. Florentine bankers came up with double entry accounting in the 15th century to keep track of trade around the world. This was the first step toward capitalism. The IMF's currency framework could now be used as triple entry accounting in the digital age. A neutral ledger checks every transaction at the same time. The IMF writers talked of a market that is moving toward fewer currency pairs, with a third currency or C system acting as a universal middleman. Does this sound familiar? That's the real purpose behind XRP, an asset that links all currencies without necessitating trust or pre-funded accounts. And here's the best part. They don't talk about Bitcoin or Ethereum in that function. Why? Because those networks were never meant to be liquid. They were made for ideological and computational purposes. Ripple's XRP is meant to be used for settling, not betting. It's the pipes, not the pump. Let's take a step back for a second. The world's money system resets every few generations. The US dollar becomes king in 1944 at Bretton Woods. Dixon ends the gold standard in 71. People's trust moves from metal to monetary policy. Analysts say that in 25, we will enter the digital Bretton Woods period. And who do you think is secretly making his plans? Yes, the IMF, the same organization that set up the first post-war system. This time, though, it's not real gold that gives value. It's digital liquidity that gives trust. And that liquidity has moved freely between CBDC's tokenized bonds, stablecoins, and regular money. That's where the money comes in. A neutral bridge asset that makes sure all digital currencies can talk to each other. Picture a translator at a meeting of the United Nations who can instantaneously turn every comment into a language that everyone can understand. That's XRP as money. The IMF also realizes that if there isn't a bridge, the globe will break apart into currency silos. A digital dollar zone dominated by the US, a BRICS token zone, and an EU CBDC bloc. Fragmentation is bad for efficiency. Ripple's technology is actually made to bring them all together. So when the IMF talks about a paradigm that lowers friction, gets rid of trust dependencies between two parties, and refers to Ripple's XRP ledger, they're not predicting the future, they're mapping it. The IMF is building the framework, but the private sector is moving just as quickly. BlackRock, the biggest asset manager in the world, has already started test initiatives to tokenize things like government bonds, money market funds, and even real estate. And what needs to be done to settle tokenized value around the world? A bridge that works with everyone. At the same time, Brazil, Russia, India, China, and South Africa are creating their own cross-border infrastructure outside of the FAST system. They are hard to work with. They can't all agree on one settlement asset like the wand, the ruble, or the real. But they can agree on a digital middleman that isn't used for political purposes. XRP is a bridge that doesn't have a flag. This is where history repeats itself. In the 1800s, international trade depended on gold bills and merchant credit, which often failed when there was political instability. Commerce didn't stabilize until global clearinghouses started using neutral standards. The same thing happens now, but the clearinghouse is digital, decentralized, and runs all the time on distributed ledgers. XRP's on-demand liquidity, ODL, already does this in places like the Philippines, Mexico, Japan, and Dubai. What is being tested right now on a few billion-dollar scale could eventually support trillions. The IMF, World Bank, and BIS have all said that the next big step in global banking would come from synchronizing liquidity, not more rules, more capital, or faster capital movement. That's the silent change that's going on behind the scenes. Trust is the most important word in the IMF study. For hundreds of years, gold backed money. Then governments endorsed it. Now math backs it up. In the IMF system, trust bridges take the place of trusted intermediates. And the whole structure of Ripple is literally dubbed a trustless bridge. When you wire money today, you trust your bank, the bank that handles your money, and the people who make sure everything is safe, each consuming a piece of time and money. With a digital bridge, like XRP, people stop trusting institutions and start trusting algorithms. Transactions happen in seconds, not days. Assumption is replaced by transparency. It's not just about being efficient, it's about evolving. And a fresh trust model has always been the start of every time of economic growth. People trusted contracts more than kings during the Renaissance, which led to the creation of joint stock businesses. The industrial period did well because railroads and telegraphs made it possible to trust people far away. The digital age needs a way to trust people, and XRP might be that way. So what does all this mean? The IMF's plan for a new currency isn't solely based on science. It's the plan for a world beyond SWIFT, where money moves around the world like data via an open, programmable network. Ripple's technology, such as the XRP Ledger ODL and ISO 222 integration, already connects that world. Some people argue that Ripple builds, while others guess that institutions will integrate. There are a lot of signs that a new financial system is being developed in real time, from BlackRock's tokenized trials to providing alternate payment methods to central banks testing CBDCs to the IMF writing about currency models. History shows that revolutions don't usually declare themselves. There weren't any headlines when the printing press started. It started with a soft sound of ink. There was no statement when the internet started. It all started with a link. And now, the IMF's recognition of Ripple's XRP's part in this new currency system could be that whisper. When people wake up and realize that there is a bridge asset that connects everything, currencies, banks, and people, the value of the internet will finally be real. And when that happens, the question won't be whether XRP will be a part of the future of money. How quickly you see it will be important. If this made you think, hit the like button, ring the bell, leave a comment with your opinions,